just to inform everyone, the meeting will be recorded. So it will be on YouTube. So no foul language, no foul gestures, and be polite, please.
Thank you.
So if we start from the top. Apologies for absence.
One from Councillor Creed, who called me this afternoon in an emergency.
No, apologies.
Point out that I'm here instead of Mohammed Farouk, Tom Senior, Principal Solicitor.
And I'm here for Ian Newman.
I'm sorry, you'll have to get in here. Right, welcome everyone. We've actually got one of our independent panel members that's here tonight, Tony.
Thank you, Chair. Subject to council, so I'm not at the meeting, but I'm here to observe. So thank you very much.
Welcome to Dudley.
Thank you for the invitation.
Any substitute members?
None, Chair.
Declarations of interest? No. Confirm and sign the minutes of the meeting held on the 8th of July 2024 as a correct record. Comments?
Chair, just want to make a quick comment in relation to item 12, which is paragraph H on the page 15 of the minutes. Just regarding the response around lost and unaccounted for IT equipment. I just want to make a comment really that I find it quite, I mean, I've had the response, but it is quite alarming that we've lost £35,000 worth of iPhones, iPads, laptops just since 2020. Looking at the list that came out, just doing a quick count, it looks like around about 62 mobile or smartphones and 34 laptops or iPads. Just a comment really, I just find it very worrying, especially in the current climate that we're losing £35,000 worth of IT in the space of 4 years. And I just think we need to tighten up procedures.
Chair, if I can answer.
Right.
Yeah, I've been speaking to the head of technology systems. Obviously they're aware of the numbers and they are tightening up procedures. They're going to get HR and legal involved at an earlier stage to recover items that haven't been returned. So hopefully things will improve going forward.
What I'd actually ask the question, GDPR, how are they actually, how is the council complying? Because obviously once the person's left the employment, GDPR kicks in.
It does. All our laptops are encrypted, so that's a good thing. Hopefully, when somebody's left the organisation, their network access is removed, so their access to the council's systems is taken away. People shouldn't really be storing stuff on their laptops, but obviously, even though you tell people, they still do. So, it will be tightened up going forward. I think certainly the head of service is aware, and certainly they're going to be taking a more proactive, response going forward, as I said.
Is that Councillor Kell?
Obviously, I'm concerned, but I mean, I accept the response from Graham.
Yeah. Councillor, I'll pass on your concerns and obviously make sure that they tighten up their processes.
Thank
So we're going to actually deviate from the agenda. Grant, the auditors, are going to actually be late arriving. They've had to change the person that's giving the audit. So we are going to go to statement of accounts.
Thanks, Chair. So I'm going to be doing the statement of accounts, but we have got William here, who will do from Glasthornton, who will do the annual findings report, which is their audit of the statement of accounts. You'll have in your pigeonhole or your email box 110 pages worth of tables, numbers, narrative, and such like. You'd have a separate document. You've seen that.
Which agenda item are we on to? 7.
So in the actual booklet that you've got, there's a covering report, and then there's an actual separate statement of accounts that's been bound. We can go through any questions you have, but I just thought I'd give a bit of an intro as to what statements of accounts are about. I've got some slides here. I'll circulate those tomorrow. And if you do have any questions, just follow up, happily answer over email or do a separate briefing. Because, it's better to have an informal discussion sometimes on any of the detail. Because sometimes you don't always know what you want to ask until it's something and you've thought about it. So happy to respond to anything that springs to mind later on. Let me just get this to work. Okay, so the annual accounts are prepared, and what we have to do is prepare them under international financial reporting standards, but we then have to reverse some of those transactions out and replace them with transactions that are valid for statute reasons. And there's a few notes in the slides on those, and that's all brought together in one of our statements. And that's why it sometimes can be very difficult to actually compare the management account reports that we submit to Cabinet on a regular basis and try and cross-reference some of those numbers to the actual statement of accounts, because there are two different things that are going on. We did publish our accounts, our draft unaudited accounts by the 31st of May, which is a statutory deadline. Will and his team have been on site since July, I think it is. We've had a lot of audit samples, a lot of queries that we're going through, and he'll be able to provide you an update on that later on. I think it's fair to say that the first part of the statement of accounts is a narrative report, which we're obliged to prepare, and there shouldn't be anything new in there. That should be just extracts from loads of other public documents that we bring together into one summary, just to provide an overarching view of what the council is doing and what it's all about. When I get the draft accounts come through from the team, and I have to say that Laura and Jennifer do all the hard work with actual statement of accounts and the rest of the team, I tend to have the draft and it's like, well, where do you start? And I think for me, it's always looking at what has changed since the previous year. So when you've got all of those tables of numbers and you've got the 23, 24 figures, have a look and see, is it in the same sort of ballpark as what it was last year, or is there something different? And then ask the question, why is it different? I've said here, we've got sort of 4 core statements that we have to prepare. So the cash flow statement is one set of figures, but within there, we've actually got information that's in about the dedicated schools grant, the housing revenue account, public health grant, and the general fund. So all those 4 funding streams are all amalgamated together to produce one cash flow statement. And then the same on the balance sheet. We've got one balance sheet for Dudley Council, but you've got all of those different funding streams and all those different assets that all amalgamate themselves up into that one document. So normally, if we go to Cabinet, we'll produce a report on the dedicated schools grant or the general fund or the HRA. This is all combined up for Dudley Council in its entirety. And I know I've put loads of acronyms on here, so I apologise. I need to look at that. The next one is the CIES, which is the Comprehensive Income and Expenditure Statement. And that's sort of like a profit and loss account in the commercial entity. And again, it's one set of figures that brings all of those different funding streams together. And then the MERS is the movement in revenue reserve statement. That's the one that Ian always used to spend a lot of time on at auditing standards, going through the opening balances and all of the transactions that take our usable reserves from last year and taking them from our accounting adjustments to get them back into statute, back to our usable reserves that we had on the 31st of March 2024. For that one, there is actually identifiable splits between the housing revenue account reserves and the rest of the council. And when I mean that, say, the rest of the council, in the general fund here, we're actually talking about ring-fenced areas such as the dedicated schools grant and public health grant and general fund. So there are sort of almost three different strands there that normally we'll separate out for our management reports, but for the actual council statement of account we bring together. And just for completeness, there's two other statements which we're obliged to prepare, and one is the housing revenue account. So that has its own sort of set of statements that are all given the size and the scope of what it covers. The collection fund is a term we use for council tax and business rates. So the council acts as an agent on behalf of our preceptors, like the police and fire, to collect council tax and business rates and distribute it either to the government or to those precepting bodies. And that's another area where we have to change from international financial reporting standards to the statute. And I can mention that in a little while. But those are the sort of the key core statements that you may want to focus on if you did want to have any bedtime reading in terms of the actual statement of accounts. This is that movement in reserve statement. So that's the international financial reporting standards versus statute. And the third bullet point down there just highlights the sort of the points that financial reporting requires us to calculate depreciation on our capital expenditure on our assets. But when it comes to how much the council has to spend each year, we have to reverse depreciation out and replace it with something called minimum revenue provision, because that's what councils have to account for in terms of council tax and all of that. So depreciation is calculated. It's something that's real, and the auditors spend a lot of time looking at it, is an understatement, but it doesn't actually become a cost to a council taxpayer for that. I've just mentioned the collection fund. And again, normally as accountants, we would say that we do things on an accruals basis. So we account for income and expenditure in the year that it would be incurred. But from a council's spending capacity, council tax and business rates is built into the 23-24 figures based on its budget. And any variances are dealt with in future financial years. There's adjustments on pensions in terms of the way that they, as a cost of service or in a cost to our statement of accounts. And one of the big things there is that a lot of you will probably be aware that we have an overspend on the dedicated schools grant, about £40 million. Well, usually under normal accounting practice, that would form part of our usable reserves, and our usable reserves would sort of cover that level. So the government has actually got a statutory override in place. So that negative reserve, so to speak, has been classified as an unusable reserve. So it gets pulled out of those numbers. And that's why, again, it's another one of those differences between a financial set of accounts that you would normally prepare under accounting rules and then all of the sort of the government legislation that places upon us. These numbers in these tables are summarised and they're all taken from the statement of accounts. So I will just share those tomorrow with you rather than going through too much detail with you tonight. But as I say, please feel free to ask any questions. This is the sort of, if you've been at auditing standards over the years, this is the sort of table that Ian would normally have presented, which takes our balances as at the 31st of March 2023. Split between general fund and then unallocated. So that's what you tend to see when we have a medium-term financial strategy table. We show unallocated general fund reserves. And as of March 2024, that was down at just over 8.8 million. Then you've got the other general fund reserves, which are the classed as ring fence, because they may be public health grants and there's a ring fence to that. Or they may be earmarked reserves So there are certain things like Paragon, which is where we built the PFI school. So we were cash rich in the first few years of that project, and then we draw down that reserve. So we've got that earmarked on the balance sheet for the rest of the life of that project. Then you've got the housing revenue account in terms of their reserves. And then the last one there is the capital grants. So again, a lot of that is actually HRA in terms of capital receipts and other items there. So that gives our total usable reserves of sort of £78 million. Although it's usable, there's certain caveats about what you can use some of that for, and it's a mixture of revenue and capital there. And it also includes, as that note there reminds me, the school's delegated budget. So although the dedicated schools grant is in deficit, the schools hold balances themselves in their own right in terms of their delegated budgets, and that is separated out, and that is within these numbers. I've just put a table of some things that might be of interest for people, because the statement of accounts is a record of all of the transactions during the year, and it's amazing what you may find in there. You may be interested or not. So I've just pulled a few things out, and again, you can have a look at them, and then if you've got any queries in terms of what that table or what that data is showing you, then happily respond. I suppose that bottom point there, the accounting policies, just to try and sort of link some of the things together here. In April, we tend to bring a report to this committee for the committee to approve the significant accounting policies and estimations. So again, what you approve there in April forms part of the statement of accounts. What you look at in terms of the Treasury statements and the Treasury policy, there's a number of pages there around page 75 in terms of our external borrowing and about all of our investments. So it does bring together a lot of the scope of what this committee is responsible for, all forms part of those statements of accounts. And that's all I was going to sort of go through tonight in terms of a presentation. William's here to actually let you know how the audit's gone. The actual recommendations of the report, if members are happy to go down that route. The audit hasn't been completed yet. At the moment, there are no changes to our usable reserves, but there may be once the audit has been completed. But as in other years, what we've been minded to do, committee minded to do, is approve the statement of accounts. But if there are any changes to the actual statement of accounts that don't actually change usable reserves, whether that can be delegated to the chair to approve those separately. But of course, if there are any changes to usable reserve, then I'd expect to come back to committee with a full update.
Okay.
Happy to answer any questions.
Questions?
Thank you, Chair. If I can just make some general comments. Firstly, thanks to Rachel for giving that overview, and it increases our understanding a bit more because this is very technical. And whilst I can read the narrative elements and can comment on that, I mean, the financials are very difficult, and I think we've got to find a way of educating or raising awareness amongst members what these figures mean, because there might be one, and this is, I'm reliant on external auditors as well for their assurance on this, because that's why they're paid for, to look at those and to assure us that whatever is being presented here is right, because the movements in terms of finances, all of those, a small element here and there can be significant, which we as members might not see straight away. So that's really important. And maybe you can give some thought how that is presented in the future to make, so that we can then offer proper scrutiny and challenge to that, because unless you're an accountant, it becomes very difficult to read all these figures. Obviously, some of the ones we can see there's been a reduction in reserves and things like that, which is again quite worrying. The one I was going to ask on page 54, this is the number of compulsory redundancies. And I can see that in 23-24, there's been 72 compared with 22-23, where there was 21. So is there an explanation why a high number of compulsory redundancies? And you can see the costs as well increased from 700,000 to over 2.4 million. Is there any particular reason why that is so? And also, I think on one of the tables I saw, the number of compulsory redundancies amongst those paid 100,000 plus is 5 compared to 1 in 2022-23. So to me, that shows that there's a level of instability within the organization. And if that is so, why that is the case? Thank you, Chair.
Through you, Chair. The actual cost of the redundancy, if I'm getting the right table, will actually include the pension strain. And that's what's variable. And that's why it can lead to really expensive exit costs. So our redundancy policy is basically your statutory number of weeks times by a multiplier of 1.25. And it's also capped at the national limit as well. So it's sort of fixed in terms of what your total redundancy cost could be at around 25, well, it's less than £30,000. But if somebody is made redundant or voluntary redundancy and they're aged over 55 in the local government pension scheme, then they're entitled to
Supplemental.
well, they're entitled to an unreduced pension, and that's what can be, over £100,000. In terms of the numbers this year, in terms of the number of individuals, so 72. Some of that will be part of the school catering. Although a lot of staff would have been cheaped across to alternative providers, there would have been back office staff that aren't eligible for cheapie that may have been made redundant. There's also the school improvement service as well. They've restructured to try and be more fit for purpose for the high needs block. So it just is reflective of the activity that's going on in the council. At that point in time, in the last financial year in 23-24. So it will be a mix of schools, dedicated schools, grant staff, and our own general fund staff, depending on what restructures have been going on.
Yeah, thank you for that. I mean, and your explanation ties in with the numbers who exited by package or packages by cost of band. So 0 to 20,000, there were 67. And that, your kind of explanation of schools and other, so that makes sense. But why 5 in terms of those on 100,000 plus? We're talking about staff at the senior level of the organization, leaving the organization. So, is there an issue or a problem why they're looking to, because Dudley historically has been a place for people wanting to come and work for Dudley because of, its sustainability and all of those kind of things. And do you think that the issues in terms of the finances of the council at the moment, people are not obviously leaving the organisation to go to other organisations?
Well, these are redundancies. So these are the council making a decision to make a post redundant. So it's not about staff not being happy and leaving. But those high cost packages, you don't have to be a senior member of staff to incur that. Okay. You just need to have a long service in a local authority. And that's what generates that pension fund strain. By all means, I can look at those specific 5, but I don't think it'd be right for me to share names in a public meeting. But I do know one in there, and they're not a head of service or anything like that, so that they're not a highly paid individual. It's just the way that the pension strain works.
Okay, great, thanks.
Any other questions?
I was just going to ask Chair if the external auditors can give us the assurance that whatever's in this statement here is watertight as it can be, and they're happy with the numbers.
Shall I cover that as part of the audit findings report when I go through? That's
Yeah.
probably the best.
Yeah, sure.
Just anything else on the statements? Worthwhile, Rachel coming.
Yeah, Chair, I mean, I am going to raise something, but maybe I'll raise it on the other one, because if you read the statement, even the narrative, it's saying everything is fine. You know, and whereas we know that there are challenges, and where in the statement are those challenges recorded? Because, you know, someone not knowing deadly situation at the moment, they would look at that and say, well, okay, everything's there. Other than looking at the reserves and all of that, reading the narrative, you would say everything was absolutely spot on. And whereas we know that is not the case. So I don't know if anyone wants to comment on that.
That's a fair point. I mean, these were prepared, you know, sort of April, May time in terms of, well, even before that, the narrative report in terms of taking that down. And I think our financial position was difficult when we set the budget in March, and you know, it's only slightly, well, it hasn't really changed much. It's still a perilous position. And that's already been documented elsewhere. So I don't have a problem with making an adjustment and putting in some sort of statement, just that perhaps reflects the difficult position and the work that's being undertaken.
So, sorry, pages 12 and 13 do reflect within the narrative report the financial position as it was then. I mean, they do go into, well, not detail, but they do summarise the position and spending and controls. So yeah,
We can add a little bit
we need
more.
to add more, but
Yeah.
Chair, if I could just add to that, don't forget the annual governance statement is published with the statement of accounts. And obviously that goes into detail in terms of the council's financial position.
Any other questions?
Yes, Chair, just a question really about the size of the font. For the accounts, it's tiny, and some of the illustrations, some of the graphics, I can't read the print at all. Any reason why it's so small? Compared
Yeah.
to at the end, that makes the last report look huge.
Yeah, I mean,
Any reason?
committee papers are just printed on font 14, and then other papers, which just been a default because they're just going on the internet as such, in terms of the statement of accounts. But, you know, we can look at that,
Yeah, I mean,
make them bigger.
Default shouldn't be any lower than 12, smaller than 12 usually, 12 or 14, because of visual impairments that people may have.
No.
12 is recommended as the.
I thought it was 12, to be honest.
This is
if it has not down, then
This is not,
yeah.
this is for sure. Okay.
Any other questions on the state? Can we move on to visitors?
So, thank you, Chair. My name is Will. We haven't met any of you before. I'm the senior manager from Grant Thornton, and I sort of lead alongside Andy, who's the engagement lead, the audit of financial statements for the 2023-24 audit. So Andy can't be here tonight because unfortunately he's got COVID, and therefore Jonathan has just joined us in the corner, who sort of led the team and around the value for money work. So once I'm finished with the audit findings report and any questions that the committee may have, the next item will be handled by Jonathan, who will take you through that auditor's annual report, which summarises the value for money work that we've completed to date. So the report that I have for you tonight is the audit findings report. The report sets out the work that we've completed to date and our findings. Now, the report was issued last week, so there has been some movement on the report since it was sent out, so I'll try to sort of update those as I go through. The report is still in draft. The audit work isn't yet complete, and therefore there will be a final audit findings report. I'm not sure which committee, I hope for the next committee, that will set out sort of where we ended up and the conclusions of all of our work. That does mean that we're not yet able to say exactly what opinion we're going to be able to give on the financial statement. Again, we'll update the committee once we have a final audit finding report. So the first sort of area that I wanted to draw your attention to is on page 4 of the report. So this covers the main headlines from our audit, and as Rachel said, we have been on site since July, sort of 1 day a week, and then also remotely working throughout. To date, we've identified 4 adjustments to the financial statements that have resulted in an adjustment of £69.3 million to the council's net asset position, but these do not have an impact on usable reserves at the council. I'll go through these in detail shortly, and we've also raised 3 recommendations to date, which are included in Appendix C. At the time of writing, there were several items outstanding, but we have now been able to close some of these. We are still waiting for the letter from the pension fund auditor, but that's sort of out of our control, but we will continue to chase. And once we get that, it will allow us to conclude on the sort of pension fund net liability. We also need to complete the testing of council dwelling revaluations, resolve the queries that we raised on the narrative report. And finally, myself and Andy need to finish our review of the work that the audit team have produced, as me and Andy have been on leave over the last couple of weeks. We will then need to receive a final set of financial statements from the council. That being said, we have had a set from council which set out those £69.3 million worth of adjustments, and we have checked those and we are happy with them. However, there is a chance that more adjustments come out down the line or things change. So we will need to receive that final set and do another proof read. So our audit work remains incomplete as we await the conclusion of some additional work in relation to property disposals, and that may lead to some extra testing. However, until that work is concluded, we can't comment on how that is going. So if we move on to page 9, this sets out our work on revenue. Now, under the ISAs in the audit plan, we would have reported that this is a presumed significant risk. However, due to the income streams at the council, we have rebutted the significant risk, but we have still conducted a significant level of work. Now, we did identify that within note 6, so note 6 is a note which essentially splits out the income and expenditure and it states what nature it's come from. So we identified that within grant income and fees and charges, there was a misclassification between the 2 lines. Didn't impact on the actual income and expenditure statement itself, and it didn't impact on any other notes within the financial statements. However, note 6 and note 7 just need to be adjusted for 18.8 million. This did also then impact the prior year note for a value of 15.4 million, which management have adjusted, and we've checked and we're happy that that has been processed correctly. But as I say, that doesn't impact usable reserves. It is just a presentational error. We did then also identify 2 further errors, one which further related to a misclassification of income, and another due to a clawback on grant funding not being processed and therefore not reducing the grant income correctly. This resulted in an extrapolated error of 0.78 million. So it's very small in the context of the revenue that the council generates, and therefore it's not proposed to adjust because that is an estimated figure. And so it wouldn't be prudent to adjust given the size. On the next page, we set out 2 significant risks. So the first of these is creditors. Now, the report highlights that our work is still in progress, but we have made progress since we issued this report. We've reviewed the evidence that the council have provided, and there are some sample queries which are with the finance team. We've not identified any issues to date in relation to creditors. We also set out on this page our findings in relation to management override of control. Now, this is again a presumed significant risk under the ISAs, and we cover this by testing a significant amount of journals, but also around areas like estimates and controls around journals and those sort of processes. Now, we haven't identified any issues with the actual journals that we've selected to test so far. However, there are some queries with the finance team, but they aren't because we think they are necessarily unusual. We just need a little bit more evidence before we can sort of tick the box, if you like. Now, we have raised a recommendation in relation to the journals approval process, and that's just because the journals are approved sort of retrospectively, so they get posted and then a sample of them are approved at a later date. And it just means that there's some that won't be approved, and it's also quite reactive as opposed to sort of preventative. So we have raised that recommendation, and that can be seen, I think it's Appendix B. we are awaiting the outcome of the value for money work, because this may lead to some additional journals testing depending on the findings. Now, the next page sets out our work on land and building valuations. We do still do a significant amount of work on land and building valuations, and anyone that has sort of gone through an audit findings report will know that land and building valuations take a lot of the auditor's time. We have found some errors. So first of all, in council dwelling valuations, we've made a lot of progress on that over the last couple of weeks. And there are just, I think it's about half a dozen queries outstanding with the valuer. But we have identified one error where some assets were not correctly classified as assets held for sale. So this resulted in a £10.6 million adjustment to recognise these as assets held for sale. But we've not identified any of the errors to date in relation to council dwellings. So those assets that were held for sale, I believe, were sold in May, and therefore should have been recognised as held for sale at the end of March when they were marketed. Now, in relation to land and buildings, we did find more errors, and the largest of these relate to the incorrect BCIS rate being used. So when the valuer generates their valuation, they will look to an index, and that index is usually the BCIS, which is a cost index. And what it does, it essentially splits out and says a town hall, for every square metre in that town hall, it is worth £100 a square metre, just an arbitrary figure. Now, there are different rates and there are different regions, and there's a lot of decision that goes into picking the appropriate rate. Now, when the valuer selected the rate for this year, they chose the Dudley rate. Now, the issue with the Dudley rate is that it's quite a small sample in comparison to sort of how broad Dudley is, and it doesn't really give a fair rate to every category that it gets split over. And therefore, the more appropriate factor is the West Midlands factor, and that is the rate that was used last year as well, the West Midlands rate. So the council and the valuer have agreed that the West Midlands rate is more suitable, and therefore have updated this year's valuations for that West Midlands rate. And it does result in a £21.5 million understatement. However, that does not affect any usable reserves. It all filters through the revaluation reserves and gets sort of written out with statutory override. We also identified some smaller errors which kind of get amalgamated when we do our extrapolation at the end. So we identified that the incorrect BCIS rate was used for Stourbridge Town Hall. So that, I believe, the rate that was used was the rate of a library as opposed to the rate of a town hall. So that has been reviewed. There's also then the Lister Road depot had used a national rate instead of a West Midlands rate. And we also identified an error in relation to the split on land between built on and non-built land, and that impacted the prior year. So the council did some work this year to ensure that the splits were more accurate, but in them being more accurate this year means that they were not accurate in the previous year and therefore indicates an error. However, because that error is below our materiality limit, because it's 5.1 million, we do not propose, management do not propose to adjust for this on the basis of materiality. Now, we also identified an error with some floor areas used, and they were just where the floor area is slightly differentiated from what the valuer had used in his calculation. So when we take the error of the Town Hall, Lister Road depot, and those floor areas, we get an extrapolated error, so an estimated error of about 1.3 million, which is not material, and therefore is not proposed to be adjusted for. Now, on the next page, we set out findings in relation to the pension fund net liability. So the council this year reported an asset, or a pension asset, and one of the considerations that needs to be made is under IFRIC 14, and it essentially states that you have to cap the liability at zero. You can't go into an asset. So the adjustment that needed to be made was to bring that asset down, or to bring the funded asset down, which results in an adjustment of 100.9 million. Again, this does not affect the usable reserves of the accountant of the council. It's just the way that it is accounted for through the standards. There is now a liability on the balance sheet, and that is for the unfunded element of pension liability. Now, as previously stated, our value committee is not yet complete, but Jonathan will take you through the auditor's annual report shortly. The next section I really wanted to draw your attention to was Appendix B. So this sets out the recommendations that we have made. So first of all, when we conducted our payroll testing, we identified that one employee's national insurance number was incorrect. Now, the council have actioned that almost instantly as soon as we told them about it and made them aware. And we have since checked that that has been corrected. It isn't now flagged as an issue. So we are happy that that error that we did identify, there aren't any other errors of its nature, and also it was corrected in a timely manner. However, the council should ensure that they have controls and processes in place to make sure that doesn't happen again going forward. The second was the journal's authorisation process, which I raised earlier. And the third one is that there are a significant proportion of assets with a nil net book value in the asset register. So what that essentially means is that the assets should have been disposed of by now because it's at a nil value. It's not, shouldn't be worth anything to the council. However, by being on the asset register, it indicates it is still in use. Therefore, if it's still in use, does that mean that the depreciation policy was too aggressive earlier on in its life? And does that need to be sort of reconsidered when they take on new assets and ensure that depreciation or that useful life is appropriate? Then Appendix D, that just sets out the adjustments that I've spoken through in this report. They're just put in sort of a table format, so hopefully make it a little bit clearer as to where they impact and what the impact is. With that, that was all I was planning to say. I'm happy to take any questions from the committee.
Any questions?
Yeah, I mean, Chair, firstly, again, thanks for this. And I think there are some questions which I will kind of pick up in the next report, because some of this is kind of repeated in that anyway. But what it does tell us is that there are significant risks in the organization, and this is on page 24. And if you just, I mean, we've got housing standards compliance is a significant risk. Medium-term financial sustainability is a significant risk. Ineffective project management arrangements, significant risk. Standards and behavior of members, and I will come on to that in the next report, because that does need some looking into. Budgetary control in children and adults is a risk. Dedicated schools grant, although Rachel earlier on said, and we're grateful for the statutory override. However, it is a massive, significant risk, which if it doesn't materialise any money from central government, then ourselves together with a lot of other authorities are going to be in very deep trouble. Processes in place for sale of council assets is another. So there's lots of risks. So my question to the auditors is, in the face of these risks, where does this put Dudley in relation or in comparison to other comparable local authorities?
So I do think that that will be best picked up as part of the auditor's annual report, because that is where the work is documented in detail. So I don't know if you want to comment now, or do you want to comment?
Yeah, I can comment on it later in much more detail, but it sort of pick up the context, the question on the context of Dudley in relation to other local authorities. Dudley's got a lot of challenges, and we'll come on to those in a lot more detail. Some of these challenges aren't ones that we're seeing at other local authorities, but some of them most definitely are challenges that other local authorities are facing, predominantly, especially around financial sustainability. But if you sort of put them all together, that's what we've identified the range of risks. And again, I'll just come on to those in much more detail, because they all seem to be coming to a head at the same time in Dudley, which is probably brought out in our annual auditor's report, which I'll touch on in a bit more detail.
Just, Chair, I mean, in terms of a lot of the information requests, it says outstanding, and your work is ongoing, and we don't know some of that when it's going to be completed. Again, in terms of the level of information which is outstanding, how does that compare to previous years? Are we at the same point, or is there significant delays? Or
no, so we are significantly ahead of where we were last year. I think I didn't say in the report, but the finance team have been incredible throughout. We've had a lot of information back in a really timely manner, and we have been able to process that quickly. We haven't faced any real delays in terms of receiving samples back. It's just the sheer volume that there is to process. We test sort of 80 to 90 journals. We test significant amounts of revenue transactions, expenditure transactions. There's a lot of work that goes into the audit, and these really are just the last few bits that are outstanding now. It's just I can't say that I have to tell you that they're outstanding, but they're not sort of, there's not significant amounts. It's just sort of the odd couple of queries here and there, really.
Chair? Yeah. Just for my own learning, if you could, going back to the evaluation of land and buildings,
Yes.
Is there a material impact of having that inaccurate? So obviously we would want them to be accurate, but does that cause anywhere in access to further funding, grant funding, or anything? Or is it just a proper accounting that we want the accuracy to be right?
It's just the proper accounting side of it. So because of the statutory overrides are in place, in a similar way to what Rach mentioned about depreciation earlier, the sort of council taxpayers shouldn't face the burden of sort of asset prices going up and down, and therefore it does get written out of the sort of CIS into the capital adjustment account, and it goes through. So there isn't really a burden on the council. It is just the accounting to get the accounting correct, really.
Okay, thank you.
Jack,
I think Rachel wanted to come in as well. Did you want?
The councillors come in first. It was just a statement at the end, please.
Right. Just wanted, it's probably more a question for yourself, actually, Rachel, just a couple of points, to be honest. It is referenced on page 20 again, around delays around receiving evaluation reports. I just want, I know this is an ongoing issue, and it sounds like perhaps it's got a little bit better this year, but I just wondered sort of.
I think it's going to be a lot better this year, to be honest. I don't think we'd received the report by this time last year, and we actually had it in sort of April time. And so it's gone a lot more smoothly. We haven't had to continue to chase up for the actual report or up for any audit queries. It's just been quite depressing that we've had these errors, I suppose, because things were going along really well compared to the problems that we have had in previous years. So there's still more work to be done because of where we are, but it has moved on significantly. There's a lot more contract management going on, regular meetings, those external providers who do that work for us, both Savills and Bruton Knowles.
And just one other point, which was just referenced earlier in the sort of presentation, around this error in paying the national insurance contributions to the wrong accounts. I think it was referenced on page 29. I just wondered, I mean, I know that this one's obviously been picked up and dealt with, but has there been any work to make sure that it hasn't affected anybody else? Because clearly that could have an impact down the line on individuals.
So if you like, I can come in. So essentially what we did is we were able to take a report from payroll system, and it gives us the name of every individual, their job reference numbers, all the national insurance numbers that they used, and it had some other sort of personal information on there as well. And we were able to do a comparison that said, are there any duplicates essentially of national insurance numbers throughout? Because you wouldn't expect any. Now, we did identify that some have more than one job post, so they have more than one job with the council. However, this one, it was just this one item where it was two different people that were at the time sharing an NI number, and that was just because it was entered in error. So we are happy that it is just that one case. There haven't been any others. Our report, we ensured completeness of it to make sure we had a full report, and we did that check ourselves to make sure that there wasn't any others affected. And when we received the corrected report from the council, we ran it again to make sure that one, that had been corrected, but also that no others came.
Right. Okay. Thank you.
That's certainly something that Graham and internal audit we can pick up in regular sort of control checks on payroll data going forwards anyway, to hopefully prevent that from happening again.
Yeah,
Obviously, my concern is somewhere down the line somebody could be, suffer detriment if that's, not dealt with. So
yeah, absolutely.
big fella.
Anything else, Jack?
no. Okay.
Any other questions?
Chair, so just on the valuation side, the national rate, West Midlands rate, Dudley rate, was different rates being used? What should we be using in future, and why was different rates used throughout?
So that would have been the valuer's decision at the time. So the valuer would have chosen to use the Dudley rate. Now, that is where the error essentially came from, is that when we reviewed it, we didn't consider the Dudley rate to be the appropriate rate, and therefore the West Midlands rate has now been used. So the Dudley rate, it isn't used anymore in the council's valuations. And then secondly, the national rate, again, we identified that for one asset out of sort of all of them, they'd use the national rate for the Lister Road depot. And again, we challenged that, and they have now corrected it to use the West Midlands rate, and so the national rate is no longer used following these adjustments. It is determined that the West Midlands rate is the appropriate rate, and that is the one that has now been used sort of universally across all of the DRC valuations.
Cheers, thank you.
So can I just ask, that'll be the same going forward in next year and the year after?
That would be a question for the valuer. I can only audit what the valuer gives me, so if the valuer does change their mind next year, then we will have to have that conversation with them next year to understand why we would expect it to stay the same, unless the valuer gives a detailed response as to why it needs to change.
We want for you to take back the Rachel.
Yeah, absolutely. We've made
Over there, and then it'll stay the same.
Any other questions?
Oh, I've got.
Yeah.
Thank you, Chair. So my question is, are you content with the responses received from management?
To date, yes, with the things that we've asked for. There are still some queries outstanding, but to date, yeah, we're happy with what we've received.
you, Chair, there was a question made about how progressed we are in terms of the audit. Well, just to say that we got our 22-23 accounts signed off by the 31st of December 2023. And by doing that, we are in the top 10% of all local authorities in the country. So there are significant backlogs with audits nationwide, and they're actually have to bring in new legislation about backstop dates and other things. So whilst we'll miss the statutory deadline because it won't be signed off tonight, I think we're in a lot better place of knowing what our finances are compared to lots of other councils. Not meant to say that there's not a lot more work we can do to stop these errors and going forward. But I think, we need to recognise that we are in a pretty good place. Even some local neighbours are a couple of years behind on their accounts.
Chair, if I could just come in there. I think that's really important. Rachel's just summarised that very quickly, that good practice has been recognised by SIPA and the LGA. And as Rachel has said, the work that was done has made a real difference, and to be in the top 10% when a lot of councils are really struggling. I think we talk a lot about the challenges we face, but I think it's also good to recognise good practice. And this is something that we are recognised for. Thank you.
Any other questions before we move on? So I think we're going to Jonathan next.
Yes, thank you. I'll start by introducing myself. Apologies for being late. It was a last minute call when Andy was had to travel from home. But got here on time, which is great. So I'm Jonathan Meakin, Associate Director in Granthorpe's Public Service Advisory Practice. I'm a SIPA qualified accountant and used to work with Will on the audit side. But we support the audit team with the value for money work given over the past few years, the enhanced amount of scrutiny in that area of the external audit. We provided additional resource and insights to the external audit team. So I led the value for money work from our perspective, and my colleague Alexa, some of you were spoken to in the room, did a lot of heavy lifting alongside me. But first of all, we want to put on record our thanks to the team for the engagement that we've had from officers through the process in terms of providing information and responding to a lot of queries that we've had through the process. And as you see, as I walk through, a lot of work has gone into this, and some quite detailed findings are coming out of it. But what we're presenting is our annual audit report for 22, 23, 24, detailing the findings relating to our assessment of the council's arrangement for securing economy, efficiency and effectiveness in its use of resources. So we look across three criteria at this. First one is financial sustainability, which looks at the arrangements for ensuring the council can continue to deliver its services through planning resources to ensure adequate finances and maintain sustainable levels of spending over the medium term. Governance, which looks at the arrangements for ensuring that the council makes appropriate decisions in the right way. And finally, improving economy, efficiency and effectiveness. And that's around arrangements for improving the way the council delivers its services, including understanding of costs and improving outcomes for service users and residents. You'll see on page 3 of our report, this details a summary of our findings across 3 areas. And just at this point, I'd like to draw your attention to the fact that currently, at the point of this report, we're withholding our overall assessment of the council's arrangements in relation to governance as we complete our additional work in this area. This will be reported to committee at a later date once completed, and it would not be appropriate to comment any further on this aspect until the additional work is completed. I won't comment on it in any more detail tonight. You'll note from the summary shown on page 3 of the report that across both financial sustainability and improving economy efficiency and effectiveness, we continue to rate the council as red. For both areas, this is because we consider there to be significant weaknesses in place that remain outstanding. But as previously mentioned, we're withholding the assessment on governance until the conclusion of our additional work. I'll now discuss each of the 3 criteria areas in more detail. Starting with financial sustainability. In our 22-23 AAR, we identified 2 significant weaknesses in relation to the medium-term financial sustainability and the financial governance arrangements of the council. These significant weaknesses have subsequently been superseded by the statutory recommendation issued in February 2024, following a deterioration in the financial outlook of the council. This statutory recommendation remains in place given the ongoing financial outlook facing the council. At the point of this report, the council was forecasting a £5.5 million budget gap for 24-25, which would be serviced from unallocated general fund reserves. At year end, this would leave a balance of 2.2 million in the unallocated general fund reserves, and the council's forecasting that this balance will be entirely depleted in 25-26 and will not cover the total deficit forecast for the financial year. Despite the council pursuing an urgent review of its operating model to avoid depletion of reserves, we remain significantly concerned over the council's financial sustainability over the medium term. In addition to our overall concerns relating to the financial sustainability, we have some specific areas of concern that I'll draw to your attention in a bit more detail now. First of all is savings delivery. So in order to deliver the forecast outturn for 24-25, the council needs to deliver £15.6 million of savings. We consider this to be ambitious within the context of the historic savings delivery in Dudley. In 22-23-24, the council delivered £25 million of savings against a target of 7.8 million at savings delivery of 64%. Under delivery of savings in 24-25 that are not mitigated by other factors will increase the pressure on the already diminished reserves balance of the council, further reducing the financial resilience the council faces. Moving on to the second area. So in 23-24, there was continued evidence of members not considering the recommendations of officers in relation to the financial position of the council. This builds on the concerns that we identified during 22-23 in relation to the 23-24 budget setting process and the savings propositions that were initially agreed and then rejected or rejected without any credible proposals. The specific concerns identified in this year's work are in relation to the new Penns Meadow School. So the report that that was presented in January 2024 as a preliminary medium-term financial position. Clearly, it asked the Cabinet to consider the progression of this site in the context of the financial position of the council and the spending controls that were in place at that time. The report and the supplementary report from the Section 151 office, which we considered to be an extraordinary report, clearly outlined that proceeding with the project would override the spending controls. Members resolved to override the spending controls and proceeding with the project. On this basis, we remain concerned that members are not adequately focused on meeting the council's financial challenges through the decisions that they make. Third area is around transformation. So the council has recognised the need to rapidly deliver organisational change, and we commend that. The transformation activity is progressing. This is a positive step, as we've previously commented, that the organisation has not always shown a willingness to embrace change. However, there remains a need for members buy-in to deliver on this, and we've noted concerns on this previously. We've also concerns over the pace of change required to meet the financial challenges the council faces. We're concerned that the savings from a new operating model will not materialise in time to deliver the balanced budget required for 25-26. And the council's consideration of the need for exceptional financial support also shows the concern over the pace of change required within the council. This is an area of concern. The next area I'll touch on is a dedicated schools grant, which I believe has already been mentioned, but the council is currently subject to the statutory override that runs until the end of 25-26. The forecast at the time of reporting to the council for the end of this financial year is a DSG deficit of 40.3 million. Through the Delivering Better Value programme, the council's made progress in slowing the increasing rate in spend against the high needs block and a reduction in the number of EHCP needs assessments. However, the council is reliant on the statutory override, and there's a significant risk to the council's financial sustainability should the statutory override not be extended, because there's insufficient reserves to cover the deficit balance. We do acknowledge that this is a national issue, and there's lots of councils that are in a similar position to Dudley, and in many cases in a much significantly worse position than Dudley. And there's a need for a national resolution to the issue, but the risk to the financial sustainability of the council remains, and we highlight the concerns around that in our report. So, in conclusion, based on the findings we consider to be a significant weakness in the council's financial sustainability arrangements, the statutory recommendation that we raised in February 2024 remains outstanding and reflects our concerns over the medium-term financial position. You'll see on page 35 of our report the detailing around the statutory recommendation, and that we report that although the council has begun to implement the changes related to the recommendations raised, remains in need for urgent action to identify all available opportunities to reduce the current budget gap and reduce reliance on the general fund reserves. Each of the individual considerations within our statutory recommendation remain outstanding and should be actioned urgently to avoid a Section 114 notice being issued. That concludes financial sustainability, and I'll move on to governance next. So as previously mentioned, overall conclusions with regards to governance remains outstanding, while the additional work we're doing remains in progress. This will be reported to the committee at a later date, and I won't comment any further on that at this point. However, we have done some work on governance arrangements. We do consider it to be a significant weakness identified related to the control weaknesses around the council's approach to disposal of assets. On this basis, our findings, we've raised a key recommendation. This is detailed on page 7 of the report. We've recommended the council should take the following urgent action: review and approve the newly created protocol for disposal of properties, but we understand this is due to be presented at this meeting, and we acknowledge the action taken by the council. Provide training and awareness programs to relevant staff involved in the disposal process, and strengthen the internal controls related to the marketing and sale of council-owned properties. And we understand from speaking to the council officers that an action plan is currently in development to address these recommendations. And again, we acknowledge the urgent action that has been taken by the council in response to these findings. And again, I will reiterate that the work on governance remains ongoing, and we'll report again on the overall findings of that to the committee at a later date. The third area of improving economy efficiency. In the 2 previous years in our annual report, raised a significant weakness in this area relating to the performance in the housing service and the regulatory notice served to the council. A significant weakness in this area and the accompanying key recommendations remain until the regulatory notice is lifted. We do note that progress has been made by the council in addressing the issues, but this does remain open as that regulatory notice at the point of reporting remains live. In the economy efficiency effectiveness area, we've also raised 2 improvement recommendations that we consider to be closed due to action taken by the council, and details of those are found in our report. And we raised a new improvement recommendation with regards to the council exploring the linkage between the finance system and the procurement system. But again, we know that progress has been made by the council in addressing that recommendation. So, in conclusion, we've got significant concerns with regards to the council's financial sustainability in the medium term. This is expressed through their statutory recommendation remaining open. We acknowledge that the progress is being made by the council in addressing our recommendations, but urgent action remains necessary from both officers and from members. We also have significant concerns relating to the council's arrangements for the governance of property disposals. Some of these concerns are raised here in this report, but they will be covered by our additional work, which will be reported at a later date. And for the final area of economy efficiency effectiveness, we have significant weakness in relation to the regulatory notice, but we acknowledge that the council made significant progress in addressing that, and hope that we see that lifted soon. But I'm happy to take any questions. Thank you.
Questions? Stop. Okay.
Yeah, thanks, Chair. Just a couple of questions really, and a comment. Your page 5, I think it's our page 71, reference the disposal of assets that we're looking at. Are you considering actual housing stock as part of that, or just or council buildings?
It is the process for the disposal of assets. So any council-owned asset, if it's to be disposed of, it's a process surrounding that. So it could be a housing stock, it could be non-housing stock. It is the process rather than the actual physical asset.
This might be one for our officers rather than yourself, but reference on our page 94 and your page 28, it talks about the disposals programme having circa 76 sites. I just wondered whether we'd be able to see a list or access to a list. Whether anybody knows what that list is?
Exactly. I'm just trying to find the page. 94.
94, yes.
Yeah.
This is the one that lists the health and social care venture way, that area.
It's in the bottom paragraph.
Yes, in the bottom paragraph, and you're asking for the full list of the buildings, yeah?
Yeah, I mean,
Yeah, there will be a mixture of buildings, land, small parcels of land, but I can certainly take that one away as an action.
thank you.
Sorry, Chair.
And just one final point, probably more of a comment really. Page 95, which is page 29 in the sort of external report. The recommendation for improving integration of financial and non-financial information reporting to members. It references the cabinet policy group. There's a sort of an indication that people have been spoken to, but I just wanted to make the point that clearly that's just the cabinet members on the lead group. It's not circulating to the wider membership of the council. So I'm not convinced that information is really going out. It suggests that that's, if you like, recommendation is dealt with, but it's not the wider membership, the backbench membership of the council that are receiving that information.
Yeah, we'll take that away. I think clearly we're speaking here about the executive and as you say, the cabinet. So we'll take that away with regards to the wider member cohort.
I think it is important for all of the council members really to start to have a better understanding of what's going on.
That way.
Thank you. Thank you, Chair.
Yeah, thank you, Chair. So at the start of your presentation, you mentioned that you picked up quite a lot of weaknesses, and you said that a number of these reflect what's going on in other authorities, the financial situation, but you said others were unique to Dudley. Can you say a bit more about that?
I think it's no secret that councils are across the country, particularly metropolitan boroughs, are facing, and sort of urban councils are facing significant financial sustainability challenges. The cause of those is varied, and they're responding to it in completely varied ways. So it's not unique in terms of Dudley's financial position. It is acute in terms of the significant financial resilience and sustainability concerns we have about Dudley in terms of sort of the depletion of reserves, the scale of savings required, the pace of savings required. That is quite a significant challenge for the council, but it's not a unique challenge, but it still needs to be addressed. That doesn't take away that there's financial sustainability for the sector. In terms of property disposals, that is a very Dudley specific issue that we've picked up from our work. And again, we'll comment on that more in the additional piece of work. Likewise, the regulatory social housing regulatory notice, it's a Dudley specific issue. There are other councils that are in similar positions, and we know that the council has made improvements with regards to that. The one thing I think to touch on in terms of the overall financial sustainability challenges, we referenced the need for members to make those decisions that are going to be tough to address the financial sustainability challenge. That is a key issue, and not unique to Dudley in terms of lots of councils are battling that from an officer and member cohort perspective to address financial sustainability challenges, but that remains a significant priority for Dudley to make sure that that is acknowledged across officers and members, and that the need to address the acute financial challenges needs those tough decisions. So I think some of the macro issues that we pick up on are sector-wide, but there's very sort of nuanced Dudley relevant parts to it that we've picked up on in our report.
Okay, thank you.
Yeah. Yeah, thank you, Chair. I mean, I have got quite a few comments. I mean, I'll try and see if I can raise as many as I can. I mean, firstly, I must say, my 25 years as an elected member, I mean, this must be one of the worst audit, or I can say damning audit report. I mean, all we've heard from the auditors are significant concerns, significant weaknesses. And these have been racking up over the years. I mean, July 2023 was the first indication which the controlling group did not accept, despite our call saying, well, there were some problems going on. And then suddenly came October, everything was kind of now, yes, there is a problem. So all of that period kind of went, either they couldn't bring themselves to the public and say, yes, there is a problem and let's look into it. So turning a kind of a deaf ear. And, this is nothing new in terms of what I've said. This has been consistent in meetings that I've raised this, whether it's been audit or whether it's been select committees or whether it's been the cabinet meeting where I attend as a shadow cabinet member. And I think, what this report sums up is failure on three fronts: financial failure, governance failure, and there's elements of commercial failure. So all of those three, when added together, does put the council, its sustainability, its finances in a spiral. And as we know, once things get into a spiral, it's very difficult to get out of. And as you have rightly said, members need to take some tough decisions. But I think this report, there does need to be a distinction, because when it refers to members, it refers to every member. And you know that the council has a cabinet decision-making structure, and the decisions are made by the cabinet, not every member. And we, in terms of the opposition, have made those calls, but they have been kind of either been shouted down or, ignored. I mean, it talks about the Penn's Meadow, which is mentioned in a number of different positions in this report. And again, I mean, the Section 151 officer was quite outright in his report in terms of the recommendations. And not only his, but also the improvement board, which is operating in parallel, that, this was not the time to go ahead because of the council's financial position and the difficulty it's going to put the council in terms of the interest it has to pay from year one. And then I think it was about 300 or thereabout £1,000 increasing to £1 million. And when the council's already struggling with finances, where do you then find that money? That means something else has to give. The other some of the elements. So I think, I don't know what state this report is. It is important that clarification is made in terms of the governance, i.e. who's in control, who's running it, who the decision makers are. Because when it says members, it tarnishes everyone with the same brush, and it isn't not for calling out some of the issues. It's because we haven't got the power to do anything about those decisions. So I think that's really important. I think there are issues about the land disposals and all of that, and I know you've said there's an investigation ongoing, and I would very much hope that is brought back to this committee as soon as possible. And again, that came about as a result of robust scrutiny and challenge, I must say, from our sides in these meetings. Obviously, just hope that that is concluded as soon as possible, because there are issues, and the council needs to learn from if there have been mistakes made by the council, as well as any other third parties that are involved. And one of the things I'm going to ask Chair is, and again, by all means, check with the monitoring officer, is at some stage, and as part of the learning process, I think the committee should request the third party to come along and to give their side of the story, because what we will hear is whatever's been presented to the auditors or whatever, but we ourselves as elected members want to hear what really went on from their perspective. And similarly, if there are officers who are involved, by all means, they are free to share their experiences in this, because, these kind of things, we can't continue and ensure that this kind of issue doesn't kind of repeat and doesn't happen again.
Just for clarity, Choke, I take it that's for Wellington Road?
Yeah, that's right, yeah. And maybe one of the things, again, I'll raise it here in terms of assets and sales and all of those kind of things. Whether they're brought back to this committee at some point in terms of the whole full list of elements. I think, Chair, if it's okay with you, I'll stop there for a minute in case other members have got other questions, and I'll just flick through my pages to pick up some other issues, which I'll bring up if anyone else doesn't bring those up.
Yeah, thanks, Chair. I just wanted to make a quick point, really, in relation to the comments around, obviously, we've got significant challenges around financial sustainability. And one of my concerns, and I have raised this before, I think is some of the financial technical knowledge of some of the councillors. It's just how it is. I've got an economics degree. I'm not a genius. I'm not particularly clever. But what I noticed a few weeks ago when we had the training, I sat through the training with other people, and some people did seem a bit perplexed by some of the terminology. It was quite high level. I understood some of the terminology and the language and whatever, but I sat there thinking, if you haven't actually got an A-level or whatever, you're going to sit there and think, what's that? And I felt there might be a bit of a gap between the knowledge that, in a sense, is required and what they were trying to portray to the council, and where some people are. It's almost as though you need to perhaps do a little bit more basic stuff as well, so that people can latch on and then follow on to the more complex stuff, because obviously if you've got...
That's then if you can dumb it down for us.
Well, yeah.
I'm just trying to bridge that gap, because if you know what you're talking about, that stuff is a great refresher. But if you don't, you're sitting there thinking, what's that? And I think that's part of the problem, because one of the challenges we've all got is we all need to be more clued up about what's going on, and people need to challenge more. But to do that, they need to understand. And it's bridging that gap somehow.
Absolutely. And I think the training that you're referring to is the one that was delivered by Link. We did try and do a precursor to that for Treasury a couple of weeks before, which was just open for audit and standards committee members rather than councillors. And I'm not saying that was great, but it was trying as a step to sort of bridge that gap and as an introduction before sort of Link come into. It
was actually quite good, to be fair.
Oh,
you did dumb it down quite well.
Thank you. Good. I like to keep things basic.
Yeah.
But I think it's one of those things that, coming out of that dumbed down training was that we can do more of that and actually, show you what we do on a day-to-day basis when it comes to Treasury, and have an example of what goes on. So it's about time and resource and energy to put into that, and it's going to take time because, like you say, you didn't do your economics degree in 1 2-hour session either, and we're all accountants, right, here, and it takes a long time it can be done in steps and in blocks, and I think we've started that with Treasury, and we can do more of it going forward. But it is a complex area, there's no doubt about that, but we've got to do more to get everybody on the same page.
Any other questions?
Yeah, Chair, thank you. I'm learning and development lead for the group, and Chair, in your role as whip, you have a role in that as well. And I'm wondering that we've got a governance working group meeting coming up where we're talking about learning and development for members. I think what's possibly missing is, yeah, all well and good, Rachel, that you're providing some training to members. But it's limited. Yeah. There's only so much you can take in one session or even two. And then you've got very complicated reports that come before you, and you're feeling that you need to understand every word because of the responsibility that you hold and the accountability that you have for what is agreed and the questions that you ask. I think what's possibly missing is that support that members could have that's possibly independent of the council. So some sort of input that's independent, maybe through Grant Thornton, where we can as members be taken through the sort of questions, given an indication of the sort of things we need to have explained to us and the sort of questions that we might want to be asking. Now, some other councils which take scrutiny very seriously have put resource into that type of support for members. We haven't traditionally on this council had that type of support at all. We've had lead officers from other directorates lead on certain scrutiny committees, but they have not had that independent technical knowledge to provide advice and support.
I suppose Tony's here as will be an independent person that sits on the committee as well going forward, subject to council as well. So, that's not the answer, but it's a step in that right direction in terms of what's needed as well.
It's also about not just somebody, an extra person around the table who might have that knowledge and can ask the questions. It's about how do you bring members on as well to be able to be effective in their roles with this very complicated area of business.
Any other questions?
Yeah, Chair, if I can just carry on then, if others haven't got any questions.
Sorry, Jonathan, we do like to get value for money.
It's okay.
I'll ask them in no particular order. One is in relation to the recommendation made by Audit some time ago, external auditors, I should say, the post of monitoring officer to make it a director appointment. Now, we've raised that and discussed that many a time in this committee. However, every time we've been told we've been looked at new operating model and all of that, but nothing concrete has come back. Do we know where things are with that?
I think it's probably the best to answer that.
Yes, certainly, and thank you, Chair. A review of the senior management structure is underway. I'm doing that work at the moment, and that will be presented. So that was something that had been started by Mr. O'Keefe before he left, and I'm picking that up. So that's how we're addressing that. That is a recommendation that has come through. However, many councils have a monitoring officer that isn't at director level. They do have monitoring officers that could be head of service or simply a monitoring officer. The thing I would say to members, the importance of the monitoring officer is the statutory responsibilities and protections that role comes with, just like the section 151 and just like the head of paid service. They have those statutory roles to ensure the good governance and assurance of the council. But it will be something that will be reviewed as part of the senior management restructure and then presented.
Got a time frame on that yet, or?
So the aim is that it's being done now, and it will be within the next 6 months that we've concluded. Thank you.
Well, at least we've got some time scale, 6 months, so we'll wait and see, because it's probably been already 1 and 2 years since this has been going on.
Yeah, so
and it's just been to and froing, and it's not good when members raise issues in a committee, particularly audit committee, and then nothing happens. There's no kind of follow-up. So I think it's really important, anything that's raised here, and in the light of a recommendation made by external, yes, different authorities work differently, but let's, think it through, bring back a rationale for either having a director level post or not, and then we can make a decision, yes, whether that's acceptable or not.
If I could just come back there, Chair, just to clarify my point on the 6 months. So that isn't 6 months to present a structure, that is 6 months to actually start to have implemented certain elements of it. So we are looking at doing that. So more than happy to keep the committee appraised. The council is also developing on building on the Fit for the Future programme, which was started last year. We're now developing a single integrated improvement plan that's based on the National Best Value Framework, and that will also allow members to monitor progress because there will be regular updates that will be coming through scrutiny and cabinet so that they can be reviewed. Thank you.
Thank you, Chair. I mean, this is on page 90. It talks about saying the council's performance is presented monthly to CMT, which is Corporate Management Team, and Cabinet Policy Group, alongside monthly MTFS to outline reports to align reporting. And you're saying we consider improvement recommendation to be closed. Considering this, I don't believe it should be closed, because none of those, the Cabinet Policy Group is a closed group. You know, it doesn't come to, as far as I'm aware, I mean, I stand to be corrected, to any scrutiny committee where it can be scrutinized like we are now. So it does need to be much more transparent. That's my comment on that one.
Yeah, Chair, if I could come back on that. So absolutely, as part of the improvement around financial control, we've put in place monthly performance, financial monitoring and performance monitoring. That does go to Corporate Management Team and the Cabinet Policy Group, but financial reporting and performance reporting also goes through Cabinet and the Overview and Scrutiny Committee.
Okay. The other one, quite a serious one, this one, particularly in the way it's written and also in the way it is and can be interpreted much further afield than the council boundary. It is on page 97, and it talks about the relationship between officers and members, and where it says where poor conduct will not be tolerated and action is taken to restore trust and respect towards officers. I think no one would want that kind of relationship, and the way this is, and you know, we've heard these statements that there is a poor relationship between members and officers, but no substance behind. I mean, that needs to be shared if there is an issue. I mean, certainly I can say that wouldn't be tolerated within our group in terms of how elected members behave with officers. There need to be a good relationship between officers and members. Yes, I mean, things sometimes are frustrated because of the length of delay or the lack of response, and that needs to be distinguished. Because, I mean, I'll give you an example, and this is more personal. I am a non-executive director in another organization, and when they read this report in the public or in the press, then I had to go through a fit and proper process to see if there was anything, you know, and you know, that is the kind of thing that these statements are really important. And it is for the chief executive to bottom this out and set the record straight on this. The vast majority of the members have really good relationship with officers, and it is a two-way street. The way it's written here, it just appears that it's just members, you know, that is the problem. You know, we need to balance the way that is written. And you know, a challenge for the chief executive to deal with that and sort that out, really, because it doesn't shed a good light outside of the organization, never mind within that. And some of the difficult decisions we have and the challenges the council has, we need to have that good relationship to be able to have open and transparent discussions and conversations, to be able to deal with matters The other comment, Chair, on page 101, a statutory services, a list of statutory services to determine minimum level of or service or statutory list or whatever it is, to determine the minimum level of service legally required. Now, we've, again, I think through this committee, and we've asked many a time to have a list of services that are, essential to deliver, because it's good to know what those are. Because obviously, if the Section 114 notice is issued, then and the commissioners come in, that's what will it'll bottom out to in relation to, well, you can only deliver this and you can't deliver all that. We need to have an understanding of what we are required to deliver legally, and maybe the public need to know that as well, because so there's a clear understanding between members and the public.
Just bottoming that one out. So probably each of the directors, they need to give us a list of the statutory services that they've got to supply at any one time. That's okay.
Yes, we can do. We are reviewing statutory services. So as part of the improvement programme, we have functional reviews. They are looking not only at the statutory functions, but also at the level at which the council can continue to afford those, obviously within the legal parameters. Would you like to see just a list of statutory functions, or would you like to see the work that's coming out in terms of reviewing those? That will be
to be fair, I mean, I would have thought we need to see the all the functions that we'd have to supply in a Section 114, so that we can actually prepare if we do go into 114. I'm very much prepare for the worst, hope for the best.
Just through you, Chair. I mean, if we look at Birmingham, who are in Section 114, they have not stopped delivering non-statutory services. They've reviewed every function with a view to the impact it makes on the local residents, etc. But absolutely, we can put together something. I'm not sure just a list of statutory functions will help, but if it's okay with you, Chair, perhaps we could take that away and develop something that might be of useful so that you can continue to monitor it.
Please. Anything else, Shaukat?
No, I think I'll stop there because, when I started in those comments, I think that kind of sums it up in terms of this report. It doesn't shed the council in good light. And as I said, there's been failures on a number of fronts. I didn't want to make, there is a fourth element as well, which I don't want to say because it'll bring it, make it more political. But the three failures I've said, I mean, and there's the fourth one, but we all know what that is.
What I would say, there is problems between officers and members. I would have hoped that the leadership are informed, or the whips of the party. It is important to have an exceptionally good working relationship. I know if I find anybody in the Labour group that is being disrespectful, we'd be having very strong words, and that doesn't take away from the fact that positive and robust, not even criticism, challenge, it's needed in officers at every level. Asking why a decision is made isn't being disrespectful. The way it's actually done can be. It is important. I know the Labour leadership from top down, we are actually told the Nolan principles actually matter, and that actually encompasses everything we do.
Yes, and if I may add, Chair, what we expect, as an opposition, for example, we are here to hold the ruling group, and that means officers as well to account. And we must be able to facilitate respectful disagreement between members and officers, where both can challenge each other on the views that they are expressing. in a constructive way. Often though, I have come across officers who are uncomfortable with that challenge, and they can interpret that as bullying, when actually it's just a member knowing something about their subject and being rigorous in their questioning. So I just think it's really important that we move to a position, because challenge, regardless of who's doing it or to whom, is in the public interest. And I think we lose sight of that when we start talking about disrespect between members. There has got to be a way in which respectful disagreement can be facilitated and encouraged.
Well, any other questions for Jonathan? Thank you for taking the time to come, Jonathan. I understand it was a bit of a shock this morning for you, so.
Oh, wait, so it's not to you.
Okay. And moving on, annual government statement, then land transaction protocol.
Right, thank you, Chair. So the accounting audit regulations require the council to produce an annual governance statement. So the annual governance statement, in effect, is assessment of the effectiveness of the council's governance framework, is detailed within its code of corporate governance. So the statement was produced in liaison with a number of council senior officers, and the draft then went to corporate management team and was discussed with corporate management team and agreed. So the AGS, or annual governance statement, covers the financial year 23-24 and the subsequent period up to the sign-off of the 23-24 statement of accounts. So as the external auditors have said, as they haven't completed their audit yet, if they raise any significant issues, then the annual governance statement may have to be updated. If that is the case, then I will bring back an updated annual governance statement back to this committee for approval. The key sections are sections 5 and 6. Section 5 provides an update on previous issues raised. Section 6 lists out the new issues. So there was one new issue, and that related to the CQC inspection assessment framework. The overall conclusion of the AGS, as shown in paragraph 8.1, was, with the exception of the issues identified in sections 5 and section 6, the council's governance arrangements remain fit for purpose. So the recommendation of the report is to approve the annual governance statement and refer it to the leader of the council and chief executive for signature. Happy to help with any questions.
Questions for Graham?
Chair, I've got a couple of comments. Stay with me. One is in relation to the narrative really, and again, painting. I mean, this report paints a picture of everything is kind of fine. I mean, the town centre one in relation to the Portersfield description. I think it does. The report, that paragraph 5.4.7 on page 145. It does need to say that, that there have been significant delays in relation to bringing forward the regeneration. And, a lot of money has been spent in undergoing various design and development and competitions and so on, and nothing has kind of materialized. So it needs to give that element of, yes, I mean, things are going and something is going to happen this year, we hope. But, there have been significant delays for various reasons. Similarly, with the Dudley Transport interchange, and more importantly, the metro extension, it talks about, and the delays. But what it doesn't say, I mean, again, every time this issue has been raised in the council meeting, or in cabinet meetings, we've been told, yes, it's fully costed, fully deliverable, there's a business case, when we knew the business case wasn't approved. And now we find out that there is a significant potentially shortfall in funding. So, it's important that when this annual report is being written, that it is, some of the context given to some of the challenges that have happened. Similarly, with the Eton College, it just says, well, the preferred location is Stafford Street, but this report fails to say, well, the preferred option was Castle Street, and quite some time was spent on that, and then now there's been a change. So I think it's important, if you can, when you are writing this, if some of those kind of statements can be put in context. Other than that, yeah.
Okay, Chair, I'll feed those comments back to the person who completed those sections.
Thank you. That's all I've got.
Any other questions? Right. No?
Yeah, mate.
At least he's, you'll get fed in a bit, mate. I haven't got fed, you shouldn't, but. Right, moving on. So we have got, trying to get to the agenda. Lands transaction protocol.
Yeah, that's me. Thank you, Chair. As we've already heard from external audits, one of the urgent areas for improvement is the governance around the disposal of assets. In pursuance of that recommendation, we have developed that between legal and corporate landlord services, and also with some input from internal audits, a new protocol to be annexed to the Constitution, setting out the processes that will apply when the council is disposing of assets. Just to be clear, this doesn't amend any existing parts of the Constitution, including the Members and Officers Code of Conduct. They remain, and this is supplemental to them, and it is there to clarify what should happen when the council is looking to dispose of assets. By disposal, I mean sales and also leases, particularly leases of longer than 7 years. I think there was a point raised earlier about whether it applies to HRA. It does apply to HRA disposals, but only when that disposal is taking place outside of the general consent issued by the Secretary of State. In practice, that means that right to buy disposals that follow a statutory process will not be really affected by this in practice. However, if we are disposing of land held in the HRA account on a commercial basis outside of those statutory procedures under the general consent, then it will apply. It's on page 158 of it starts at page 158 of the pack, and just starts out with an introduction and a legal background to the statutory provisions relating to the disposal of council assets. There's a summary of the key of the responsibilities of various decision-making entities within the council, full council, cabinet member, etc. But I think the key part of the protocol is what it starts on the process, which is part 1 of the protocol. Sets out very clearly when assets are declared surplus by one of the relevant directorates within the council, and then the work that the corporate landlord services team will then do. Moving on from that, it's pretty clear that the disposal method sits with the Director of Regeneration and Enterprise and people who work within that director's team. It's for them to decide how the property will be disposed of, whether that's by auction or marketing, or whether to appoint agents. It rests with the relevant professionals within the council to make those decisions in consultation with legal, who will be instructed to either deal with it internally or appoint external solicitors to to deal with the disposal. At part 6, it's clear that it's made clear that any valuations must be done in accordance with the Royal Institution of Chartered Surveyors professional standards. Again, we have some internal surveyors who may carry out valuations, but in other cases, there will be external surveyors appointed to carry out those valuations. We already have a protocol relating to sales that's less than best consideration, and that will remain. That policy, that protocol will not be altered by this, although it is flagged up and referred to in this new protocol. The contractual arrangements that the council entered into on various disposals is set out at part 8 of the protocol. There's various references to mitigations, acknowledging the risks and the processes that the council should go through. A couple of points that I just wanted to highlight at page 169. It says that the council must ensure that before entering into any contractual arrangement, which is in particular relating to development, it has had sight of the developer's financial appraisals and cost plans. It has obtained its own professional advice on these and is satisfied that the scheme is viable. The council is required to ensure that it is satisfied that all developments with external parties as part of a disposal are viable before that they go ahead. Moving now to point G, another important element of this is that the council must undertake suitable due diligence to ensure that it's satisfied itself that the company or purchasing question is capable of discharging its contractual obligations and is compliant with any relevant regulations or requirements relating to money laundering. Again, the council already has a policy on money laundering, and that's not altered by this protocol, which is reinforced that it must go through appropriate due diligence with all parties that it deals with when disposing of assets. Legal documentation, again, is a must during the disposal of assets. And again, we will consider whether any transactions are best dealt with internally or externally, but regardless of that, appropriate legal advice will be provided throughout the disposal processes. I'm happy to take any questions if there's any on that, Chair.
Jeff, you have questions, didn't you?
Yes, thanks, Jeff. I've got some serious concerns about this, to be honest, having read through it. I mean, as you alluded to, all property interests, including the HRA and the Ernest Stevens Trust, are covered, but all references are actually to the Director of Regeneration and reference to general fund. So it's not clear to me how in practice this relates to the HRA, which, as we know, goes through a slightly different process and is a slightly different sort of finance stream. No director to the housing director, no reference to the cabinet member for housing. Authority to dispose of housing assets currently sits with the housing director. So I'm not sure how that authority is going to transfer to the Director of Regeneration. That was
these were actually brought up by the Director of Housing, and we can take that away again and reconsider that if there needs to be further references to the Director of Housing in relation to HRA land.
Yeah, I think it needs to be, because I think it's very unclear. And following on as well, and I think you referred to it earlier on around this best consideration protocol.
Yes.
Now, I followed the link, which is on the online version, and that actually sits within the currently sits within the protocol for disposal of council land and property. Now, again, I think that's going to cause confusion when you put this one live, because you've got council land and buildings, and you've got an existing one which is protocol for the disposal of council land and property. So I think maybe a bit of renaming or something needs to go on, because otherwise people are going to get a bit lost. They almost look like the same.
I think, as you rightly say, there's an existing protocol relating to disposal of assets at less than best consideration.
Maybe that needs to be the title of the document, right?
Okay.
You know what I mean?
Yeah,
Because it's almost look,
in there.
people are going to look at it and get quite confused, I think. just being a bit pedantic, looking at the processes. It says over £1 million cabinet deals with declaring surplus and authorises disposal. 100k to 500k, you've got the director of regen, board members, and the section 151 officer. But for some, it seems a bit odd to me that between 500k and 1 million, it's basically the cabinet member. It does reference the land and asset management group, but I'm not clear who they are. It almost looks like it's less transparent in that bit there than lower.
The 500 to 1 million.
100 to 5, it's almost less transparent than the 100 to 500, if that makes the way I read it. You've got the cabinet approval of 1 million plus, which is obviously legit, but you've got more scrutiny in 100 to 500 than in the 500 to 1 million, which again I found a bit odd.
Okay, I can speak to colleagues in corporate landlord who they were involved in a lot of the drafting of this, and particularly around the figures involved. So I can pick that up again with colleagues in corporate landlord.
And there's just a couple of other points. Section 3.5 references select committee calling, but again at the moment HRA disposal seem to go through on a decision memo, which isn't picked up by the calling process. HRA disposals at the moment seem to sit on a decision memo, which is different from the decision sheet. And I'm not sure they could be picked up on a calling.
There's delegations in place for HRA that will be specifically under the consent bill, wouldn't it?
I think so. We could,
So is there a
definitely to have a
Yeah. Okay.
So just question the calling process around that. And one final point, just to be really pedantic, the final paragraph, I think 10.1, references the anti-money laundering policy. Now, I found that, but it actually says it's due for review in 2020, so it might help if perhaps we updated that as we're linking it to this new policy.
Yeah, this protocol in itself, I should have said, is also to you currently.
So that's it, basically, Chair. But as you can see, I've got quite a few concerns around it.
Okay, thank you. We will look into that.
Other question?
Yeah, thank you, Chair. It's good to see this protocol here, and as we know the background to this and how this has come about, and the protocol should be about making things open and transparent and learning from, the issue which is under investigation. I mean, there's a few things I think it would be really good if it can be clarified in the protocol. One, you've talked about due diligence.
Yes.
If we take the issue under investigation as an example of what,
Just to be clear,
Yeah.
I won't take the issue under investigation with any comments in this meeting. It's still under investigation. It would be inappropriate to comment on it at this moment in time.
yeah, this is in the broadest sense rather than going into the specific detail. Some of this is in the public domain anyway. The issue in terms of due diligence is that due diligence should be done at the outset rather than when something has happened, then you do due diligence. So that needs to be clarified in this protocol. The due diligence process should be the first step. When someone puts in a request to purchase a land, property, whatever, that needs, that due diligence needs to be done at that point rather than when it's communicated in the press and then due diligence takes place.
Okay.
Yeah.
I'm speaking in general terms now, not in reference to any specific matters.
Yeah.
The due diligence is a process which can take weeks or perhaps months, and is done before the contract is entered into. 8.6G says the council only enters into contractual arrangements when sufficient due diligence has been satisfied. So it's clear that
I quite understand that, but I think what we're asking on the back of the learning from, in this particular example is, information was shared in the public domain about this has happened, that's happened. What I'm saying is that due diligence, I mean, if I put in a request, I want to buy this property or this piece of land, yeah, the council should then undertake a process of, have I got the money? Is it come from the right sources? Blah, blah. Does it sit in with regeneration? Will this development deliver what the council is looking to do? All of that should happen. And then you should say, well, Councillor Ali has put in a request and we've signed a contract to sell a piece of land. That's what I'm asking. It's not quite clear in this. It needs to be, that process needs to be somewhere at the.
I don't think it's quite possible to pin down how due diligence occurs in every case because it is different. You need.
Well, I think the principle the thing is, I mean, some of this will come more in the open once the investigation is done, but the principle of the due diligence, i.e. doing the checks, need to feature in the protocol somewhere. That's all I'm asking. I mean, I'm asking for you to take it away, discuss it with your colleagues and see how they can work that up. So I'm not going to go because otherwise I'll go into the.
So I was asking for is a standard operating procedure, like point one, point two.
I don't think there can be a very, very prescriptive operating procedure in terms of what due diligence is required because it will vary in different cases. I think what we can commit to, which is already in there, is that appropriate due diligence will be undertaken before contracts are entered into.
Okay. We okay with that?
I mean, I have a disagreement with that anyway, but if my comments can be noted, yes, I mean, you do the due diligence before the whether this then relates to communication, nothing should be communicated in the public till due diligence has been underdone and you're about to,
Yeah, sorry, Councillor.
Yeah.
If I could just come in terms of the communication, that was not a council communication.
Yeah.
The council formal communications, it's really important because that's referenced several times. That was not done by the council's communications department.
Apologies, Chair. Can I reissue my statement that we're not here to discuss a particular case?
No.
No, I mean, that's always, lawyers always come up with all of that, but I think I've made my point, and I want you to take it away and to relook at that, because I think that's an important element which is missing from this. The other one was around consultation, and I think the consultation with members need to be not at the point of signing the contract, at the point of when someone expresses an interest. So if the members have any information, are the members happy with, for example, this piece of land going for, I don't know, housing or for a car showroom or whatever it is. So I think that is also important.
Chair, we need to be really careful. Yeah, that's a real concern for me that could be seen as that's not part of due process. We would want to be really careful in that. This protocol is meant to put in place a consistent approach on land transactions, property transactions that can be varied.
To get rid of.
That can be varied, but once there's a formal proposal, there's a formal process for first of all identifying something as surplus that goes through its own due diligence. Then there are processes for how elements are marketed, etc., etc. Those are going through, but really to be releasing information, we just need to be really careful. That's the whole purpose of setting this in place so clearly.
I don't think it's, Chair, if I can come back, it's about releasing information. When you look through this, there is a mention about consultation with members, but that consultation is at the point where things are already done and dusted. There's no point in consulting me when something's already been done. You need to have that initial consultation that, you need to think through. I mean, I'm not here to write the report. I'm here to make comment and in terms of, what seems reasonable and sensible to me. So, that consultation needs to be taken at the appropriate stage. And I don't think the appropriate stage is where you're about to sign the contract. That's all the comments I have.
Obviously, you're taking suggestions back about the disposal protocol.
Yes.
Would it be possible to come back 14th of October with, or even if just a blanket report so we know what's going to happen before it obviously goes to full council.
Yeah, I'm happy to come back on the 14th of October.
Thank you. And moving on, that's all the questions, yeah? So, progress tracker.
Dr. Karen?
Sorry, yeah, just now. Yes, Chair, so this again is a standard item for the committee to note all the actions that were raised at the last meeting, and future business is open to members for comments and for noting.
Councillor Ali.
Yeah, I think I raised, Chair, some comments at the last meeting, and it said it was going to be programmed into the program, but I can't see any reference. There was a couple of items. One was the West Midlands Pensions Fund on page 10 at the bottom, B, 10B. There was also the issue about the closure of Castle Crystal Credit Union. I think those were two, but I can't see anything which has been programmed. So if you can pick that up with the offices and schedule those as and when.
Through you, Chair.
Yeah.
I know I've got some questions to get back to you on the pension fund, and there was a mix up in the team with me being on leave. So I will clarify when we've got a briefing later on this week. It's either something for the whole committee or it's something I can answer on the day. Or we can programme something into a future meeting. So apologies for that one on the pensions.
Chair, if I could just clarify, Councillor Ali mentioned the credit union. Was that in relation to understand, because that has already been considered elsewhere, would that be in relation to understanding how the concerns came?
Yeah.
Yeah, so we will bring that back, but in relation to in relation to the terms of reference of Audit and Standards Committee. So just cover those elements, yeah.
Then one for you, Belvinda. Outstanding audits that I've sent a letter.
Yes, so I replied to that letter.
Yeah.
And the work now is programmed in where corporate management team are looking at outstanding actions, and each director will talk through their progress, the issues they're facing, any blockages, so we can help move those forward. So that, in fact, this Wednesday, a corporate management team, it's being discussed. If there's anything more you want me to do to bring it back to give you assurance, I'm happy to do that. It is about directors.
That you have to give us assurance.
It's actually giving directors the opportunity to talk about wider issues that are impacting on their ability to deliver those audit actions.
Sorry, Chair, before you abruptly end the meeting, the progress tracker, similar to what Councillor Ali raised, I mentioned about Pens Meadow, a piece of work that needs to be done on that, and also Wood and Moor. I don't see it in the progress tracker. Now, earlier today, I met with Democratic Services to ask why we don't have a matters arising on the agenda. And I was informed that actually it's not practice. What should happen is there shouldn't be any matters arising, because anything that you want to ask about progress on should actually be in the tracker. And what he's going to be suggesting is actually the progress tracker comes in as the second item on the agenda, so that instead of having a matters arising, if you're noticing that there's something that isn't on the agenda, but it was in the notes and it hasn't been picked up and put it in the progress tracker, then that becomes as the second item, so that we can highlight that it isn't in the progress tracker. So it might be that Wood and Moor and Pens Meadow are in the progress tracker under a heading somewhere there, but I can't see it. So I don't know if it's been picked up or not.
Chair, could I come in there? I think I just wanted to just make a comment about the division between audit and standards and scrutiny. The reports on the credit union and Pens Meadow, from my initial look, appear to be more scrutiny items rather than assurance. Just want to look to Graham for that in terms of my understanding. Is that correct?
Well, certainly this is the assurance committee. Yeah.
That's right, yeah. But the scrutiny of Pens Meadow or the credit union dissolution feels more like a scrutiny item. I'm just checking that. Otherwise, we're getting very blurred.
I think at the end of the day, this committee is all about, governance, risk management,
Yes.
control.
Finance.
Obviously finance as well, and obviously it's the assurance committee as well. But so I think it is important that we stay within the remit of its terms of reference. There's no reason why we can't refer things to other committees to pick up, as you've done previously, Chair.
So if I may, I think the problem is the Wooden Moor issue is one very similar to Wellington Road, where there are concerns, and I think that you'll be looking into that.
Yeah, just care on that one. Yeah, in terms of Wooden Moor, I think I am looking into that one, Councillor. So I have made some initial inquiries, but I haven't finished my work yet. I think in terms of Penn's Meadow, I did refer it to the external auditors to see whether they wanted
They
to.
have said quite a lot about it, to be fair to it.
Yes, exactly.
It was passed over to them to consider as part of their work programme.
Chair, I did ask specific questions about it, and I don't know, Balvinda, whether or not you know the questions that I asked.
I'm happy to review those, Councillor Foster. Yeah.
And I think hopefully when you see the nature of the questions I asked and why I wanted this committee or audit to look at it, will perhaps give you some reassurance that it is not a matter for scrutiny. Because of course there may be confidential matters relating to it which do fall within the remit of this committee and would be discussed potentially on blue papers. We don't know. This is a committee that does have blue papers, unlike scrutiny committees.
So just in relation to Penn's Meadow, my understanding of Grant Thornton's work in that was in relation to the fact that it breached spending controls. There was Section 151 officer's report because of the council's financial position. However, the governance that went through the approval to borrow the capital, etc., and agree to build the school was signed off by council. So I'm just trying to understand what would Grant Thornton's work cover, because you covered the work around spending
Very
controls.
focused on spending controls.
Absolutely, which was a very key decision of the council, and that was a significant variation from that. However, the decision route to Penn's Meadow was taken all the way through full council, had all the call-in opportunities, etc. So I'm not sure there's anything there for you to be.
Not something that was on our radar at all in terms of how the decision was made. Initially, it was around spending controls and the impact of the decision would have.
Can I remind the committee what I asked for and what was agreed? So I was asking for assurance following health and safety concerns raised by parents, whether the existing building was safe for the children to use in the meantime until the build had commenced and finished. So basically, there had been some coverage in the press of parents being concerned about safety, or there were safety issues. And I wanted those safety issues to be looked at. Are there safety issues? Because that was what had come out in press articles related to.
Absolutely, Councillor Foster, we can take that offline and report that back, because that's absolutely fine.
Yeah, and also as well, to get some better understanding of the financial benefits of this, because of the fact that there is an extra financial burdens, and what modelling had been done to demonstrate, as the council were trying to make the point, that this would present savings in the future because it would be cheaper for the council to send children to that establishment rather than to others. So it was about having some financial modelling around there, which I certainly hadn't seen any assurance on.
Okay.
So that would all have been part of the decision going to council, Councillor Foster.
I raised it here. We didn't have that assurance. That's why I raised it here, and it was accepted as something that would be looked at.
Rachel and I take that offline. I'm not really too sure what we can provide. I won't make any commitments, but we're happy to take that offline. If Karen, if you could just put that as an action, we'll take that offline. Yeah, okay.
Anything else?
Chair, sorry, I just didn't know if you wanted to mention about that meeting, about those outstanding items, or those items that were suggested.
On the 14th.
That was discussed between yourself and Ian. As a teacher, I just want the committee to think that they'd been ignored, but they had been.
No.
reviewed.
Yeah. Just trying to remember.
There's not a lot.
I'm usually in bed by now. Yeah, I did meet with him, didn't I? And
Yeah, it's unfortunate that Ian wasn't here tonight
Yeah.
because he said that he was going to give some responses to
Yes.
what items could be incorporated in other reports that were being submitted to the.
yeah,
I don't know.
well, there was Castle and Crystal.
Yeah,
that was-
West Midlands Pension Fund.
Fund.
I think those were the two main ones, wasn't
Yeah.
it, Karen?
Yes, the Portersfield has been referred to our review and scrutiny to consider. And then the Moore and Wood. Sorry, has been
Yeah.
so
Of course, yeah, I'm going to take that for you.
considered. And but as an action, I will put that as a second item of business to follow the minutes.
Any other business? Please tell me no. Okay, thank you, everyone.
Yeah.
Thanks for your time.
Thank you, Chair.
Thank you very much.